What's going on, team? What's going on, family? Real quick, wanted to come to you guys to give you something, for the elite traders, one of the basics to what I actually do when it comes to looking in the market that will have you guys dominating the charts on a high level. Now, everyone doesn't have this, and this is exclusively for you guys. So this is based off my 90-10 strategy where you risk 10% to gain 90. And that's how I've been able to really hit a lot of home runs in the market with the patience and the discipline to really maintain and stay in the trade. So this right here is the basics of it. We will start off on, let's go to gold. Start off on gold and then we'll go from here. Now this system is based off internal structure as well as exterior structure as well, but it's really simplified for precise entries and exits. And I want to show you what you can expect from this. So the purpose and the outcome of what you will learn today is how to identify market bias using the external and internal structure. Exactly when to enter a trade with the KLBK 90-10 confluence, where to place your stop loss and how to take profits, session timing and how to avoid low quality trades, and a simple risk management plan you can execute from day one. Now, let's just think about this. There's a lot of visuals on this chart, but how you break it down and how you understand what's going on. You'll see HH on the screen for higher highs, LH for lower highs, HL for higher lows, and LL for lower lows. Now, that is definitely for the individuals who have already been studying, who's already going through everything and know what's going on within the market. So hold on one second, guys. All the kids are down here. Hold on one second. So not only do we have the BOS as well for breakup structure, change of characters, and those are your external structure breaks and reversals. The IBOS is your internal breakup structures, as well as your ICHOCH, which is your internal change of characters. These are all internal triggers for timing, area of interest, the boxes, and most recently the 50 bar extremes. Now we got fair value gaps are imbalanced zones that price often returns to the auto fibs, and they're already placed on your chart. So the 236, the 382, the 618, 786, these are all plotted between the current swing sessions, and shading showing you the Asian and London, New York visibility. Now, sessions and activity, this is when to trade, when to focus, when to trade to focus on London and New York sessions. Use the on-chart sessions panel to confirm high or very high activity. Avoid the dead zone. Don't trade when you see the dead zone. There's no money in the market. When the panel shows low activity, just stay away from it. Now, two ways to confirm bias: external structure, uptrend, BOS, or up with higher highs and higher lows mean long bias external structure. Downtrend, breakup structure, down with lower highs and lower lows means short bias. A fresh external change of character can mark a potential reversal in the market, as you guys see right here. Internal breakup structure went up to the area of interest. Could have took an entry right here at the highest peak, knowing that it's going to come down, but you definitely could have got in once you've seen your internal change of character and it's red, letting you know that it's time to get in and sell. Now, when it comes to the confluence, external structures agree with direction, location inside of a valid zone order block or a fair value gap, or the 50 to 618 fib. Internal trigger in our direction, internal breakup structure, or internal change of character on an entry time frame. No fresh opposing fair value gap directly in our path. And we are in a valid session window. That is your confluence, guys. When you're setting up a trend for continuation to continue that buy, your conditions are you want to look for the external breakup structure. You want to look for higher highs, higher lows, printing pullback, and to a bullish order block or bullish fair value gap, or even the 50 to 618 on the fib. Now, on a 1 minute to 5 minute print and an internal breakup structure up as price taps the zone, taps the trigger, the zone, the execution area, enter long on that trigger. close stops under the tap zone or under their internal swing, low that triggered entry. And when it targets the 38.2 on that fib or first opposing fair value gap, TP2 prior swing high or to the 618 or even a 786 extension, which is your TP3. Trail under higher lows or exit on your first internal change of character. Now, when you're looking for your second setup, how does your setup B trend continuation into shorts? You want a mirror of the long external breakup structure down and lower high, lower low. Your pullback into a bearish order block or a bearish fair value gap, or even to the 50 or to the 61.8 on the fib. Now it's going to trigger the internal breakup structure down on the 1 minute and the 5 minute. Your stop is going to be above the zone or above an internal swing. It's going to hit the higher target, which is the TP1 or the 38.2, and your TP2 is going to be the prior swing low of extensions. TP3 is trailing on exit or on the internal change of character, which may reflect going up. Now you can set up for reversals after a sweep and a change of character. I like to say when price sweeps previous day high or low of the area of interest, extreme external change of character prints against prior trend zone mark the new order block or fair value gap. Now, this is created by the change of character impulse trigger, internal breakup structure, and a new direction or retest of the order block or fair value stops. Beyond the extreme of the sweep or beyond the tap zone targets, the TP1, which is the 50 on the fib, or the opposing fair value gap, which is TP2. Origin of prior impulse or next swing pivot points, hard exit on the opposite internal change of character, guys. Now, the fair value gap and magnet and entry, this is huge because when you use your fair value gap as both the target and the entry trade enter into them for profit taking, trade from them when price returns and prints an internal trigger. Skip trades when a fresh opposing fair value gap is directly in front of the price. Now, when it comes to the auto fibs for precision, how to use the auto fibs for longs, prefer entries in the 50 to 618. That is your discount zone. For shorts, prefer entries at the 50 to 618 because that is your premium zone. Use the 38.2 as conservative TP1. Later, use the 618 to 786 as your stretch targets. Now, let me refresh this. Now let's talk about the area of interest. What I'm going to tell you guys about the area of interest is that price is going to always go from box to box, and they will move sometimes too. So you have to be aware of that. But the box's focus attention, let's focus on the lower AOI right here. See, right now we're here, but we know for a fact, I know for a fact that we're going to return to this area. It's just about time. So when you can get into a trade in this area right here, once you get that signal is ready to go back up, whatever your secondary confluence might be, that's when you're going to want to hop into that trade and take that trade from here. Now, this right here, when you enter in the trade, you're entering in the discount zone for longs. The upper AOI, the area of entry, aligns with premium for shorts. This is where you want to sell at. Best trades happen when your order block or FEG sits inside of the relevant area of interest. Now, confirm external uptrend breakup structures with your higher high, as you see right there, boom, over here, higher high, and then your lower low, letting you know that the market wants to come down. Now, we want to mark the bullish order block or FEG at the 50 to 618 on the fib. This is a bullish movement right here, coming out of the area of interest, coming to the 50, tap that 50, almost hit the 618. We know she wants to continue to push up. Now, we're going to wait for an internal breakup structure. That's what we don't have right now. We're going to find that on the 1 minute time frame and the 5 minute time frame. And then we're going to enter at a close set stop and set our stop loss a few ticks below the zone. TP1 is going to be at the 382 level, and then we're just going to continue to go up from there. Now, break even 6 TP2 at prior swing high, TP3 trail or exit on the internal change of character. Now, guys, I'm just giving you guys the full breakdown on how I use this tool. Now, later on, I'm going to show you how to really get in here and dominate this. So you can see what's going on and then just dominate in the trade, guys. Um, for futures or positioning size, just a quick math, define tick value and stop size in ticks. Contracts equal account risk in dollars. Divide by tick value times stop tick example. Like if we were using MNQ, tick value is at 0.5 per tick, right? Stop is going to be 40 ticks, risk $100. Contract equals 100 divided by 0.5. 40 equals 100 divided by 20, and 5 micro contracts adjust to stay under the percent risk. With everything that we're doing now, when you're putting in your math and you're going to trade, you're going to see how much money you're going to be willing to risk and everything when you're on that chart. Now, what not to trade? We're not going to be trading in the dead zone. So you'll just click that and you'll click that, and then you'll see the money on how much you're willing to risk and how much you would gain by selecting those boxes right there. So this would be risking 1,350 to gain 4,050. That's why I like trading over here on this platform. Now, listen, you're not going to trade in the dead zone. You're not going to trade when there's low activity. No chasing after an untested breakout with structure confirmation. No entry when opposing fair value gaps sit immediately in front of price. So if we had a yellow box right here, which would be your fair value gap, and you wanted to buy, we're not going to buy going into that because price is going to return and then it's going to come back. Now, I just wanted to let you guys know this right here is the 90-10 trading system. And this trading, we went over a couple things and, just the real simplicity of this strategy. What I like to tell you guys to end this real quick is that price is going to go from here to here. It's your job to find that time frame and literally stay on that time frame and possibly catch a trade during that 15-minute time frame if we're on the 15-minute time frame to have it run down here. And then you'll get other indicators letting you know to stay in that trade as well. And yes, you can do top-down analysis with this as well. There's so many other things that you can do in here with this, but this is just the basics, just a rundown on how to use this. If you want your hands on this, go ahead and comment on the video below and I'll drop it off to you. Let's go.